All right, so last year there was this big shift into markets outside of the United States, and some tried to tie it into the end of American exceptionalism, which I say is bunk. But you can see here, down here, some would even call that a reverse head and shoulders. We're breaking out, and we have broken that long-term trend line. So this looks like a really good trade. In fact, if we look at it more closely, this is a 20-year chart. Let's take a look at a 2-year chart. You can see this breakout is absolutely huge. It's been a really good move. The question is, of course, is it just overbought here, at least on a short-term basis, or should you keep buying it? I'll tell you this much. Coming into this month, when Goldman did a big survey of investors, most of them believed, a plurality believed that emerging markets would do extremely well, 27%. But I will say, they thought 26% also thought S&P would do as well as also. So I'm going to bring up my next guest because he says that this trade has gained momentum. Crossmark Global's CEO, CIO, Bob Dahl. Bob, why do you think the emerging markets have performed so well?
I start by observing, Charles, that so many Americans are underweight non-U.S. stocks. For the last decade until last year, that was the right thing to do. And so they kind of had their blinders on. Now international is doing better, and as you point out, emerging markets in particular. Emerging markets tend to be, if you will, leveraged plays on global growth. Emerging markets also benefit when the dollar's gone down. In the last 12 months, it's gone down roughly 10%. Their earnings are better, their valuations are cheap. And I'll add a long-term comment. If the planet's going to grow, emerging market consumers are going to play a huge role in that because much of the rest of the world populations are peaking out. So a lot of reasons to own international and emerging markets in particular.
Yeah. And then I look at a place like South Korea. It's really just 3 stocks. 2 of them will make more money next year than any companies in the world. And I love what's happening in Latin America with respect to elections and outcomes and what they're trying to do there. So much more upside. One thing I thought about you when I saw this table, the Russell 1000. You always talk about valuation. In fact, you've been kind of concerned about valuations here for some time. As it turns out, year to date, you could have easily made money and avoided losing money by just selling the stocks with the highest price to sales ratios. It seems simplistic right now, but you were also talking about this for a long time. How much longer do you think now valuations, I guess as this market feels a little bit more concerned about it?
No question about it. Look, the S&P 500 is actually below where it was 4 months ago. We've traded flattish for 4 months. Of course, inside that, there's been huge rotation. To your valuation point, there's a high correlation between what you have on the screen right now and PEs, as well as market capitalization. The expensive stocks tend to be the Mag 7 among other high flyers, and they've lagged.
Bob, in your note, you talked about yields, bond yields, and central banks, and it seems like maybe a sort of sanguine kind of environment that could ultimately lead to actually yields going higher later on. Can you explain that a little bit?
Yeah, yields can go higher if we have an economy that's strong, if we have animal spirits via the tax bill. I mean, as you know, tax refunds have just started. They're going to be huge, $150 billion more than last year. Not to mention the benefit to corporate America and the expensing of many parts of their capital expenditure. So we should have a pretty good economy here, and that probably is going to mean interest rates move up. Dollar decline also supports that.
Let's talk about making some money here. Citigroup, it's a name you like here. It's come on like absolute gangbusters, which is interesting because financials overall haven't, in my opinion, haven't lived up to the hype so far. Why is Citi doing so well?
Cheaper than the other big banks for some good reasons. The stock was up 50% in the last 12 months till about a week ago. And as you know, with the AI concern on financials, Citi and others traded down a double-digit percentage in about a week. It's coming back. We think there's more comeback to happen. The earnings should be good. Balance sheet, credit, all pretty good shape.
So we talked about the changing of the guard from a geographic point of view, but within our markets too, there's been a massive shift. You can see here, this right here, the Mag 7 names have gotten absolutely destroyed. Emerging markets at the top, Mag 7 there. But when I look at the earnings estimates, right, I look at this year, fourth quarter for this year versus fourth quarter last year. Okay, communication services, the earnings will be up just a little bit less. Same thing with technology, but both are extremely high levels. I mean, I'm just wondering, are these Mag 7 names, these mega cap tech and communication services name oversold at this point?
I think they're becoming oversold. If I didn't own them, I'd be nibbling away. If I did, as most people are, I wouldn't be doing a whole lot of selling right now. Now, they have bifurcated or trifurcated, if you will. Apple and Google, I think, are the winners. I'm concerned about Tesla, have been for quite some time, and Amazon, the other ones fall in the middle somewhere. So it's not just I buy the Mag 7, it's which ones do I own.
So let's zero in on that for a second, right? So this is your capex spending. Everyone's saying, okay, Amazon, you're spending this much money, up 42%. Microsoft, you're spending too much. Alphabet, you're spending too much. Meta, you're spending too much. Apple, Apple's not spending anything, and yet it's down as much as the other names. Why is Apple getting hammered here?
Well, Apple's in the middle of the Mag 7 pack, which may not be saying a lot. The stock is down 6% year to date. It's up 8% in the last 12 months. Look, there is a major concern. Will all this capex get a return in an investor's lifetime? That's why all the question. That's why all the rotation. As you point out, Apple's doing less capex. They're doing plenty because it's a big company, but they have so many products and I think higher earnings predictability than many companies in the Mag 7. Look how much of their business is sold to consumers, how much to businesses, how much overseas. It's a well-rounded company.
Yeah, I mean, it's and they've always had the luxury of waiting. They don't have to be first in any of this stuff. They always wait, and then they come later and perfect it because, to your point, when they put it out, they already have a pretty solid consumer base of people that would buy from them. Bob, great stuff. Thank you very much. Appreciate it.
Thank you.